Good morning, everyone. Welcome to the morning Cuppa at 8 on a Wednesday. I'm here to present the midweek futures traders technical brief. We are on week 3, November 2025. Okay, so this is our usual table that we go through during the week, and the most popular products traded by traders shows that there has been again increased volatility, which has moved setups from very positive to very negative. So I think most of us would have seen that the US indices is the one that has been very volatile, and although as mentioned previous week, I saw that there was a big movement from neutral in the second week to positive in the third week. The whole setup has actually turned to negative this current week itself. Why has this happened is because I guess that a lot of the news have been priced in and also awaiting the data that has been delayed for 5 weeks at least due to the government shutdown, and those data are important to give a direction of where the economy is going, and so that is very much being watched, and hopefully we will see those data in the next week and will give a clearer picture of where the directions of the markets are going. For metals too, from a very positive setup and also the orientation that it has shown the past few weeks, it has now also turned neutral, and it has not been straightforward, despite of all the uncertainties in the equity markets space. And this, of course, has also affected the Hang Seng Index. Hang Seng Index been performing well, and one of the better performing markets in Asia, and that has also turned negative. We have both our FKLI and also palm oil in neutral. And this is one of the charts I want to bring everyone's attention. On the left-hand side is the S&P 500, and on the right-hand side is the FKLI. So we notice that the current pattern that has been developed in S&P 500 is not seen throughout the year. This is the first time we see such a topish formation, and from the observation that we can make from here, this could be a head and shoulder pattern in the making. And if the neckline is broken, we are expecting probably more downside and could be expecting a sharper sell-off. So take note, everyone, on the developing story on the S&P 500. I think if you look at the NASDAQ as well as also the Dow Jones, similar patterns are now being emitted as well. And so those are important for us to even gauge the broader market from the current situation where it is doing now. And of course, the FKLI, if we look at the formation too, there is a double top formation, and this is considered to be a bearish indication of the market condition. And if, let's say, the US markets become weaker, the FKLI most likely will also follow suit. And so we may see a very sharp correction, and this would be one of the opportunities that we'll be looking at to maybe accumulate if, let's say, that happens. So we move on to palm oil. Palm oil had a massive sell down for 2 weeks, and currently trading in a very neutral situation. Basically, the fundamentals that have been affecting the price of palm oil has been the output, which has climbed from 11% from the previous month to 2.04 million tons. and this is reaching its strongest level since August 2015. And also, cargo surveyors reported that palm oil prices have declined. Moving ahead to the US weather, because this is one of the news that we are looking at quite consistently since there was no data available. We have been looking at the weather forecast for the US side because this is pertinent to the sharing on natural gas. Natural gas is one of the basically products that is being focused because it is very much affected by the US weather. As seen, the previous week, there was actually a cold front approaching the east side of the US. But on the right-hand side, we see that the temperatures did not actually escalate into something that was much, much colder and in fact has moderated. So that has already brought basically the prices of natural gas down. And so we can see that this is a correction that is considered quite relevant as well as also sharp. And this is, like I mentioned, the warmer weather, warmer than normal weather forecast for November 22 to 26 for the eastern half of the US side. And of course, there is also a fundamental factor, which is basically the US gas production, which remains to be high and has been piling up on the inventories. However, because we are already in the end of the year, and I think for everyone who knows the seasonal patterns, we are approaching winter months, and so weather would be colder, and therefore we maintain the call that we made previous week for the setup this week remains to be positive, and the price that we recommended, reference price of a 4.350, it was actually touched yesterday. And so therefore, there is actually a position that has been initiated here at 4.35. This morning is trading at 4.36. So this is going to be brought forward to the current week. The potential profit price that we are looking at for the 4.36 reference price is USD 190 in value. And also a potential loss price in case things go wrong will be at 4.02, giving us a value of a loss USD 340. So for this particular guide that we have shared, it is being maintained. So now we look at gold. As mentioned in the beginning, we saw that there has been a corrective move in gold prices. In fact, in the whole baskets of the precious metal, it's been under pressure, and gold has been down persistently. Silver too has dropped for at least 3 out of 4 sessions. And the news that's driving is that expectations that the Federal Reserve will keep interest rates unchanged in its meeting next month. And this is actually keeping a lid on assets, and in particular, the metal sector. So coming to the guide for gold, we have got a neutral profile for gold, but for the short-term side, we do have a positive one. So the current price is 4070, reference price is 3940. So this is in anticipation that there would be a sharper corrective move before we can look at potentially a more positive scenario for gold. So the reference price we are looking at is 3940. That is a 130 takes a move from 4070, and the potential profit, if the reference price is being met, we're looking at 4150 as the potential profit price, which will give us a USD of 210, and also looking at possible termination if things goes wrong will be a loss price of below 3870, giving us a value of 70 US dollar loss. So that's all I have for you this morning. I will pass to Joseph. Thank you.
Right. Thank you, Vincent, on the weekly futures update. So let's take a look at the Hong Kong market. What we do see right now is since last Friday, Hong Kong have experienced a very sharp corrections, that the market worry that the AI raise or the bubble is coming to happen, right? We can see that these tech stocks have experienced a very sharp pullback. Now at this juncture, right, if we look back, right, the Hang Seng is below the October level. Just to recap, that during this October, there are a few things that actually have happened, right? Trump has actually met Xi Jinping, right? And Xi Jinping have continued to stay as the leader in China, right? But however, looking at the price actions right now, the market sentiment tends to be a bit jitters, as we can see that the even though there is a rebound right in the early November, but right now we are in the middle of November, right? The index is trading at November month's low. So we will continue to continue to monitor the development closely. Now, especially 1 month ago, right, at the end of the October, just before the Xi Jinping and Trump they meet together, um, there's this one piece of news that actually came in, which is the U.S. Treasury. They are going to set sanctions on the Russia's oil productions company, which is uh, there are two Russian company. I think is one is Lukoil, right? Another is Rosneft, right? They are going to sanction them, which is coming this Friday. Now, any countries that buy oil from this Russian producer will also be penalized, right? And the deadline is coming Friday, as such that whether this will, but the um, this announcement was made before Xi Jinping meet Trump. So I think the market is actually monitor this closely until the end of this week, right? And looking at the price actions right now, right, we do see that the Hang Seng have a pullback and is heading towards the support level at 25,000 point, right? And so as long as stay about above 25,000, right, I will keep the bullish trading bias unchanged. Now, meanwhile, as of this week. Yesterday, Xiaomi have released their results. Hence, we think that the market may relook at the Xiaomi price level again. Now, you can see that Xiaomi have underwent corrections after it break below 47.50, right? So after it break below this support level, right, corrections are still in play until yesterday. It breached the lower support at 42. Right, the results only announced after the market close. Based on what we do see right now, Xiaomi start to make profits in the EV sector. Um, However, right, the broader market sentiments remains negative right now. We do expect that the Xiaomi to open higher this morning to reclaim the 42, right? But the upside resistance remains very strong at 4750. So look at the price volume chart, right? This 4750 is the level that we'll be looking at right now. So based on this distributions, you can see that the very strong resistance happened above 52 level. But nevertheless, after the results have announced yesterday, uh, today should have a counter trend rebound happen in the Hong Kong market. In fact, you look at the yesterday HXC, which is the Chinese stock that lead trades in the US market. Yesterday evening, right, the Chinese stock have started to rebound in the US market. So I think that this morning Hong Kong will have a positive opening. Then on last week, another counters, 9888 also announced their results, which you can see that the shares should have a rebound today as well. So meanwhile, this week, we'll be looking at Meituan, Kuaishou, and also the Geely results. So as for trading stocks for Hong Kong market, firstly we look at Samsonite Group 19110, right? The stock is about to break past 19 Hong Kong dollar 30 cents. So breakout happened, it will climb toward 2050, followed by 22 Hong Kong dollar. Downside support is 18. Then on Baidu, right? Despite that, Baidu is undergoing corrections. We do notice that the volume is decreasing, showing that the selling pressure are subsiding. So in the event that Baidu jump above 115, bullish breakout will happen, and that will lift the stocks towards 120, followed by 130. Downside support is 110, right? So yesterday, the S&P 500 generally sentiments are mixed, but the big cap stock continue to experience a selling pressure, such as Nvidia, Tesla, Microsoft. Some of the small mid cap stocks do um, experience a mild rebound yesterday, right? Just want to inform you that tonight Nvidia is going to announce their results, but it's going to be after market. So I think that today US market more likely will be a sideways until we see what happened to the Nvidia post market actions, right? And but if you look at our reports last week, we do actually look at some of the oil and gas companies on our technical peak, right? EQT is one of them. That this company involved in the natural gas productions. Share price have breached the 57 US dollar, heading towards 60 and 63 cents, 60 and $63. Then on last week, I think beginning of the week, Monday, we do have another oil and gas company, which is Valero Energy, right? What we do observe is that it break past the 180 resistance. So yesterday, the Valero have moved up by another 4%, heading steadily towards 190 and followed by 200. Downside is 170. Now, remember what I shared with you previously. This week, this coming Friday, right? US may start on the sanctions on these two US oil producer. So sentiment is turning positive to some of the oil and gas company recently. Together, what we see recently is that the WTI crude oil price start to rebound from the oversold level. As for the FKLI, it do experience corrections for last 1 week. However, it still stay above 1570. So at this juncture, we still keep a bullish price unchanged. FCPO have staged a very strong rebound. And um, at this juncture, right, despite the FCPO is going through the counter trend rebound, we keep our stop loss price unchanged at 4004 level. So as long as it stay below 4004, we'll keep the bearish bias unchanged. Um, as for the trading stocks, firstly, we look at Ta'an, which break past the 4.25 resistance, moving towards 4.45 and followed by 4.60. Downside supports market at 4.10. Then on, we have MBM Resources, also a break past 5.25. eyeing to test out 5 ringgit 45 cents and followed by 5 ringgit and 65 cents. Downside support is 5 ringgit and 5 cents. So we have two breakout stock this morning. Firstly, Ta'an, and secondly, MBM Resources. So I'll stop here and pass the stage to Adam on the Gamuda company report. Thank you.
All right. Good morning, everyone. So today we have a company update on Gamuda. So yesterday we had a session with Gamuda Engineering Australia and Leading Infrastructures Management, and I know to explain more about the Australian business of Gamuda. So in short, um, uh, Gamuda Engineering Australia and DTI contributed about 7 billion worth of revenue to Gamuda's engineering segment in FY25, and which is about 60% to the engineering revenue. And moving forward, we think that the portion would only be lowered to about 50% of its engineering revenue, given that local projects such as Penang LRT and Northern Perak Water Supply Scheme would already start to kick in. But I think the key point here is that Australia would continue to be a major growth driver. I mean, there's a lot of concerns on the lower margins compared to Malaysian projects, but the volume in Australia is good enough, for Gamuda for it to record earnings growth, in the next 3 years. And for example, in Australia, there's about easily more than 50 billion worth of potential job pipelines, and Gamuda has about more than 10 billion worth Aussie dollars worth of active tenders at the moment coming from Australia alone. So we think that should keep Gamuda busy in the next few years. And looking in terms of projects that are likely to know their outcome, it will be projects like the Karodi's Field Wind Farm. That's about, I think, 1 billion ringgit. We've got Mariners Link also, which is roughly 1 billion ringgit, and potentially other projects that are likely to be known in the first half of next year, such as one of the palm hydro projects. So all in, we maintain buy with an actual target price of 7 ringgit for Gamuda. We think that its RE focus in Australia and even in Malaysia, via its partnership with SD Gasly and Jintari, should continue to enable Gamuda to be a leader in the construction space. So that's all from me. I'll pass on to the next speaker.
Hello, good morning, everyone. For Johor Plantation Group, we keep the buy rating with the higher TP from 1.5 ringgit to 1.75 ringgit, which translates to an upside of 30% with 4% FY25 yield. We believe that with the higher CPO, average selling prices, and FFB output, it should benefit JPG handsomely. And also, valuations remain reasonable, trading at 13.7 times FY 2026 PE, and it's within the peer range of 11 to 15 times. On the earning results, JPG will announce its results for the third quarter on 19 November, which is today. So we expect the PATAMI to rise both Q&Q and year-on-year to somewhere around 86 to 96 million. So this should be the strongest quarter, driven by higher CPO and PK average selling price, and also better FFB output. To explain further, CPO prices were up 5% Q-on-Q to 4,280 ringgit per ton, while PK prices rises 2% to 3,460 per ton. Year-on-year, however, CPO prices were 7% higher, while PK jumped 31%. But if we see the output, the FFB output for the first quarter grew 27% Q-on-Q. However, it remained flattish year-on-year. But it was added by stronger outside crop purchases, or we call it OCP, which grew 70% Q-on-Q and 61% year-on-year. So this factor led to CPO production increase by 23% Q-on-Q and 13% year-on-year. Specifically on FFB output, the internal output year to date fell by 5% year-on-year due to wet weather conditions. But with the outside strong purchases of 31% increase year-on-year, it's set off. And the management expects the last quarter of 2025 output to dip slightly Q&Q as JPG has already hit its peak output back in August. For FY 2026, however, the internal FFB could be lower year-on-year, but this will be offset by a stronger OCP. So as such, we cut out the internal FFB growth target and raise our OCP assumptions accordingly. Unit cost wise, JPG expects FY 2025 unit cost to come in around 2,300 per ton, which is 10% higher year-on-year, mainly due to lower internet input. For FY 2026, however, the group is in the middle of securing fertilizers requirement for the full year at prices that are around 20 to 30% higher year-on-year. However, JPG targets to keep the overall costs at around FY 2025 levels by reducing logistics, labor, and upkeep costs, as well as by improving their mill efficiency. So we raise our CPO unit cost assumptions by 4 to 8% for FY 2025 to FY 2027 to reflect the low output and higher fertilizer costs. We also raised our FY 2025 to 2027 CPO price assumptions. For FY 2025, for the 3 years, we raised our targets to 4,350 ringgit, 4,250 and 4,100 respectively. We also increased CPO average selling prices premium to 4.5%, given that 70 to 80% of 2025 output has already been locked in at around 200 to 250 ton per premium. On the downstream update, the integrated sustainable palm oil complex is now reaching 57% completion and is on track to be fully operational by second half of 2026. It has 5 plants, a palm oil mill, refinery complex, bioenergy power plant, kernel crushing plant, and also animal feed mill. So for the refinery complex, JPG is targeting on the second half of 2026 to be at the break-even levels. As for FY 2027, management is targeting to achieve a PBT margin of 5 to 10%, assuming the utilization rate of more than 80%. This could potentially add 6 to 12% of its FY 2027 PBT. However, we assume a more modest contribution of 5% of our FY 2027 PBT to be more conservative. So to conclude, we lift our FY 2025 to FY 2027 earnings by 11%, 9%, and 6% after factoring in these mentioned changes and update. Our new 1.75 ringgit TP is now based on 15 times 2026 PE valuations, which is at the upper end of its peer range, which is between 11 to 50%. So given JPG's strong solid ESG profile and its estimated first downstream contributions from the second half of 2026 onwards, we believe the premium for JPG is justified. I think that's all for me. Let me pass on to the next speaker, David.
Hi, thanks, Hilmi. Morning, everyone. So for today, we have an IPO note on Foodie Media. Just a timeline. The IPO is going to application will close today, and the balloting will take place on 21st, and the listing will take place on the 28th of November. Just a very quick introduction on what Foodie Media does. The group operates in the digital media agency. Core business is around lifestyle-focused digital, as well as media publishing. I think you'll be well aware of some of the brands that it manages, 37 in total, and the more famous ones are like KL Foodie as well as Penang Foodie, and they have a very big follower base of about 46 million. In terms of the business segments, right, there are actually two primary business segments. The first, again, is the digital media publishing. This has historically been the dominant revenue generator, where it's driven by their brands as well as the social media pages that it has. The other segment is actually the marketing campaign segment, where this encompasses services such as the marketing of key online influencers, affiliate commerce, short film, drama marketing, as well as some campaign management services. Going forward, what Foodie Media wants to do with this IPO is that they'll be raising 41 million from the proceeds, of which the bulk of which will go towards recruitment of their workforce, i.e. Content, to create content. With that, we think, we are expecting a revenue CAGR of 37.5%. This is mainly coming from a broadening of revenue streams, where we expect a shift in terms of revenue mix away from the normal digital side towards more of the marketing campaigns mentioned above, such as the online influencers marketing, the short film drama production, as well as one of the key segments they are expected to drive revenue growth is going to be the e-commerce live streaming business, of which they'll be setting aside about 7 million to purchase a building and set up live streaming rooms. But having said that, while the top line growth looks pretty robust, we do expect some margin compression. This is because typically the marketing campaign segment command lower margins, and also with that aggressive recruitment of workforce, we think there will be a bit of a drag from the higher staff costs, at least in the near to medium term. And hence, we are actually only forecasting net profit growth, a 3-year CAGR of about 28.5%. Balance sheet is healthy, and with the 41 million raise, and as well as our projection for them to actually be to generate annual positive free cash flows, they should be in a net cash position going forward. We think this has enabled them to actually come up with a dividend policy where they will pay out 40% of earnings, although the yields are actually about 2% is okay, but really this stock is more of growth stock. In terms of fair value, we are actually ascribing a target P of 22.5 times to the stock. This is slightly higher than the 20 times which some of the digital peers are actually trading at. If we look at the more conventional media players, such as the your Stars and Stat, they're actually trading at very low single digit, but we think that is probably not too comparable. At 22.5 times PE, this leads to a fair value of 36 cents, or a 20% upside from the IPO price of 30 cents. So again, generally, we think the growth looks pretty decent, and that's why we have ascribed a slight premium to the PE, leading to a 20% upside to our fair value for the stock. Maybe again, just to highlight that in the near to mid-term, there could be some margin compression. This is because they are going to ramp up their workforce recruitment. Okay, that's all from me today. Thank you for joining us. Happy trading, and see you again tomorrow, 8 a.m. in the RHB Morning Cuppa at 8. Thank you.